Hey guys, my name's Brennan. I was assigned to do the chapter 4, exercise 5 for our homework this week. So let's just go ahead and get started. Let me share my screen so that we can see what's going on. All right, so exercise 4 or 5 says in its first year of operations, Blossom Company recognized $31,700 in service revenue, $6,700 of it, which was on account and still outstanding at year end. The remaining $25,000 was received in cash from customers. The company incurred operating expenses of $16,400. Of those expenses, $12,220 were paid in cash, and $4,180 was still owed on account at the end of the year. In addition, Blossom prepaid $2,390 for insurance coverage that would not be used until the second year of operations. So the way that we're going to do this is first we have to separate our numbers from accrual, and we have to separate them out into cash. So first we're going to look, and up here, so accrual, accrual on the accrual basis, it means that all of the finances, so all of the expenditures and all of the revenue are counted even if we haven't received them quite yet. So we can actually take a look at the second part of the question right now. It says right here, we've already got the answer right there. It says, which basis of accounting, cash or accrual, provides more useful information for decision makers? So we'll just go ahead and do that part first. It's going to be accrual basis, just due to the fact that when companies are going to look at what you can pay for, they want to know what your company has as a whole. If you only have your cash basis, you're only going to be able to see what you have right then in that moment, as opposed to if we have accounts receivable or stuff like that, they won't be able to see that. So we want to go off of the accrual basis so that we can see everything that our company is worth. So in this specific problem, where they recognize $31,700 in service revenue, but $6,700 of it was still outstanding. It was on accounts receivable. That would be an accrual account. Accrual basis is that full $31,700, just because the companies, so when you're looking at the company as a whole, you want to see what they have as a whole. So we're first going to recognize that on the accrual basis they had $31,700, and we'll go over here and change it to currency. So 31,700. And then if we go down here, it says that they had a service revenue, 6,700 of it, which was on account and still outstanding at the end of the year. So for it to be accrual, we're going to go ahead and subtract that. So $6,700. Leaving us with $25,000. Okay, so now we're going to look at that here. Let's actually go. So it'll be this minus this equals $25,000. Okay, so then when we're looking at it, we want to go off of expenses. And so when we're looking at our expenses, they had $12,200 were paid in cash. So we're going to go $12,200. And then also we paid out of pocket, we paid $2,390. So for a grand total, we started with $25,000, which was our cash that we received from our customers. Then we subtracted out our expenses, which were $12,220, and then we subtracted